Today is Monday, February 5th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, and Alan Bush, ADMIS Senior Financial Economist. Starting with the financials this morning, Alan, Federal Chair Powell was busy speaking on national TV yesterday. What is the significance of his comments?
Okay, well, his interview was Sunday morning, and it really contained no major surprises. He basically reiterated what he had said last week at the FOMC meeting, predicting that Fed policymakers will likely wait until after March to lower interest rates. So it does look like traders, though, are already factoring in the increasing prospects that the Fed will be slow to lower interest rates this year. And it now appears that the FOMC will reduce its Fed funds rate at its May 1st meeting by 25 basis points. But the progression has moved farther out into the future, and I would not be certain that there would be a rate cut even then. So the bottom line is that the Fed is going to be slow to lower interest rates this year, but rate cuts are coming.
Alan, with interest rates being adjusted around the world, there's an impact to currency evaluations. What are the charts telling us about the direction of the U.S. dollar in particular?
Well, the dollar index on Friday broke out above a 2-week congestion pattern, and then there was a more decisive follow-through gain today. So this suggests that there probably will be add-on strength to the dollar index. We have the next resistance coming in at a gap area at 104.69.5 to 104.79. Then after that, there's the 105.12 area where a series of resistance points come in. So the fundamentals remain supportive as well. So I think we can expect the dollar index to continue to trend higher.
Lastly, Alan, would you please walk us through the reports this week that have the potential to be market moving?
Well, this week there's really not that much. On Tuesday, nothing of consequence. Wednesday, we'll have the consumer credit report. That's expected to be up 16.2 billion. And then Thursday, jobless claims anticipated to be 222,000, and then nothing on Friday. So it's a very light week as far as economic reports is concerned.
Thanks, Alan. Mark, looking at the grain markets, we've got some USDA updates this Thursday. What are your expectations for U.S. ending stocks?
Well, historically, USA reports in February are not big market movers, and I expect this year to be no different. That said, however, I was surprised to find that in only 2 of the last 10 years, ending stocks were left unchanged for corn, soybeans, and wheat. But I think that's exactly what we're going to see in corn this year, with ending stocks holding steady at 2.162 billion bushels, which is a 5-year high. Both exports and corn used for the production of ethanol have been running at pretty decent clip. However, not my opinion, not enough to warrant a change this month. We've already started to see a pretty significant drop in ethanol production in recent weeks, largely due to harsh weather. In soybeans, I see ending stocks increasing 15 million bushels to 295 million, and that being a 4-year high. This as a result of a 25 million bushel drop in exports, partially offset with a 10 million bushel increase in the amount of beans crushed. And in wheat, I see ending stocks inching up about 15 million bushels to 663 million, and that's as a result of lower domestic usage.
Mark, this time of year, we tend to watch South America quite closely. Where do you see the corn and soybean production down there?
Well, I see no change to Brazil's corn production, that being left unchanged at 127 million metric tons. Their first corn crop was damaged due to early season drought. However, recent rains across the northern half of the main production regions, I think, has really set us up favorably for the second corn crop, which is currently being planted, and that typically accounts for about 75% of their overall crop. Plantings rest at around 30%. So I don't see any change this month. In soybeans, I see ending production being lowered about 3 million metric tons to 154 million metric tons. This puts them USDA better in line with production estimates coming from that country. And again, there too from the early season drought. In Argentina, I think you're going to see both corn and soybean production increased about 2 million metric tons to 57 million metric tons in corn, 52 in the soybeans. Recent hot, dry conditions could very likely trim the top end off the yields. However, in both cases, my estimates reflect above trend yields, not record yields, however. So to achieve these forecasts, however, we will need to see some follow-up rains by the middle part of February, which is how forecasts are leaning right now.
Mark, no pressure here, but what price level will it take to put a low in for the corn market?
Well, the price is hovering right around the 440 level, just a touch above the recent contract lows. I'm still targeting a move into the 4 to 4.25 level. The last time we had domestic stocks this high, we spent a lot of time trading between $3.50 and $4 a bushel. I don't think that's going to be a price level we see this time around. U.S. exports should remain pretty solid through much of the spring as we await the second harvest from Brazil. But I do see prices bottoming out sometime here in the first quarter. Then perhaps a little bit of a short covering rebound into the end of the month and into that USDA planting intentions report at the end of March, and also as we roll into the U.S. planting season. So speculative trader short position has swelled to its largest level now in nearly 4 years at about 280,000 contracts. So it's within about 40,000 of the record all-time high. So to me, if history tells us anything, when we get to such extremes, something comes along to triggers the traders holding short positions to rethink their ability to make money staying short. And that's typically when we put in cyclical type lows.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.